Muted.
Hi there, I'm Mark Sebastian, founder of OptionPit.com, and this is the AM Volatility. Hi there, I'm Mark Sebastian, founder of OptionPit.com, and this is the AM Volatility Report. Reminder, none of this should be considered investment advice. Consult your financial professional. Options have risk. So we've got a webinar coming up on Tuesday that you can sign up for. It should be a great time. We also have our next Saturday class coming up and our next master class, so be on the lookout for that. Those are in the works as I speak. Well, here we are after a weekend where nothing happened. We are buried in a sea of green. Amazon is up big. Apple is up. Your Googles, your Facebooks, kind of everything is up. Your financials are catching a little bit of a bid today, as are some of your technology stocks as well. I wanted to take a look at briefly, the SPX, it's up about 7, but VIX is currently up. Now, why is VIX currently up? Well, easy answer, coming off a long weekend. Long answer, well, there's still some embedded risk, all right? There's still some fear out there. So if I pull up VIX, yeah, you know what, it's up 17 cents. The VIX futures, though, aren't down very much. They're only down about 15, 20 cents right now. I would expect that as the day goes by, if we stay below 13 and or go negative on the day, that there could be some serious downside pressure on the April future. The April future is trading on par with May, which signals that April is pretty overpriced relative to May. May, one might also consider May a little cheap, but yeah, April futures are overpriced in our opinion. We just don't see, the risk to line up. Yes, there is some risk of a near-term blow-up in Syria, all right? But the real risks are on, the week after April expiration, when the first round of French elections occur, and then in May when the second round occurs. So that's where we see the risk, and that's where we think it makes sense to actually hedge. So we personally like trading in May as a hedge far better than we like trading in April, and we like that calendar spread. And as you can see, while I've been talking, April has been falling off. I'd expect to see some pressure on that contract today, some serious pressure. Aside from that, if you look at the other VIX indexes, the spread between VIX and Russell pretty normal. The Nasdaq is kind of low relative to the other two indexes. It should be a little higher, but tech has been such a leader that maybe that makes sense. That's kind of the way things are aligned. Retail, which got smoked, then had a nice little bit of a rebound, is kind of flatlining here. Just briefly, let's go through the different sectors. You can see everything's pretty flat. Energy is up, and retail is up. Everything else is pretty flat. Utilities are the one down. But speaking of energy, you see oil is back up above. USO is back up above 11, and oil has caught a bid. Bond prices continue to rise, and gold, which needs to be unwound, which I think is overpriced, is just a little bit off today. All right, folks, if you have questions, you can email me, mark@optionpit.com, or you can call me 888-TRADE-01. Have a great morning.